Bitcoin has tumbled more than 15% since Saturday. Yuya Hasegawa, a crypto market analyst at Japanese Bitcoin exchange Bitbank, provided insights into the situation. Until last Wednesday, everybody was thinking that inflation was going down gradually and the economy was relatively strong, so the Fed would start cutting rates with successful soft landing of the economy. However, July's U.S. manufacturing PMI and jobs report came in way weaker than the market expected, and now investors are worrying about the possibility of recession and dumping risk assets. Investor sentiment has been rattled. Hasegawa continued. That said, the market's reaction has been a tad excessive, given there is no absolute evidence that the economy is in recession yet. We will likely see some recoil this week. On top of economic and geopolitical concerns, crypto investors have been contending with sell pressure from Mt. Gox distributions and decreasing odds of a second Donald Trump presidency in the U.S. Polls on Polymarket, an Ethereum-based prediction market platform, show the gap between Trump and Kamala Harris has narrowed significantly since President Joe Biden dropped out of the race on July 21st. Bitcoin is already down about 21% for the month of August, a typically sluggish month for risk assets, and below the $55,000 floor that has supported it for much of the year. If it fails to recover, it could be its worst month since June 2022, when it lost about 37%. Despite the recent downturn, Bitcoin is still holding on to a year-to-date gain of 20%. Understanding the year-to-date performance of Bitcoin and other cryptocurrencies provides a more comprehensive picture of their market behavior. While short-term losses can be significant, long-term trends often tell a different story. Volatility is a defining characteristic of the cryptocurrency market. Bitcoin's price movements are influenced by a multitude of factors, including market sentiment, regulatory news, macroeconomic trends, and technological advancements. The recent drop below $50,000 is a stark reminder of this volatility. However, seasoned investors understand that such fluctuations are not uncommon. The key is to analyze these movements within the broader context of market trends and external influences. Several factors have contributed to the recent sell-off. The weaker-than-expected jobs report played a significant role in shaking investor confidence. This report highlighted potential vulnerabilities in the U.S. economy, leading to fears of a recession. Additionally, the global economic environment has been uncertain. Concerns about inflation, supply chain disruptions, and geopolitical tensions have all added to the market's volatility. In this context, Bitcoin's drop is part of a broader trend affecting multiple asset classes. Institutional investors have a significant impact on the cryptocurrency market. Their actions can drive substantial price movements. The recent sell-off has seen some institutional investors offloading their positions, contributing to the downward pressure on prices. Understanding the behavior of institutional investors is crucial for retail investors. These large players often have more information and resources at their disposal, and their actions can provide insights into broader market trends. Comparing the current market situation to previous periods of volatility can provide valuable perspective. Bitcoin has experienced significant price swings in the past, often followed by periods of recovery and growth. For instance, the 2017-2018 bull run saw Bitcoin reach then-record highs, followed by a substantial correction. Despite this, Bitcoin eventually recovered and surpassed its previous highs. This historical context underscores the cyclical nature of the cryptocurrency market. Technological advancements and regulatory changes are ongoing influences on the cryptocurrency market. Innovations such as the development of decentralized finance, DeFi, platforms, and improvements in blockchain technology can drive interest and investment in cryptocurrencies. On the regulatory front, changes in policies and enforcement actions can have immediate and long-term effects on the market. Recent regulatory scrutiny in various countries has contributed to the current volatility. Investors must stay informed about these developments to make informed decisions. Looking ahead, the cryptocurrency market is likely to remain volatile. However, this volatility also presents opportunities for savvy investors. Understanding the factors driving market movements and staying informed about technological and regulatory developments can help investors navigate this landscape. And Tony Trenchev's insight about Bitcoin retaking its 200-day moving average is a critical point to consider. This technical indicator can provide signals about whether the market is in a bullish or bearish phase. Investors should monitor such indicators alongside broader market trends. Bitcoin drops below $50,000. What does this mean for crypto investors? Welcome to our comprehensive analysis of the recent turbulence in the cryptocurrency market, focusing on Bitcoin's dramatic drop below the $50,000 mark. This significant event marks the first time since February that Bitcoin has fallen below this crucial threshold. Today, we will explore the reasons behind this drop, the broader implications for the market, and what investors can expect moving forward. Bitcoin's price dipped to $49,111.10 at one point, marking its lowest level since February. This was a shocking decline, especially considering Bitcoin was trading close to $70,000 just a week ago. This sudden fall has sent ripples through the investor community, triggering widespread speculation about the future of the cryptocurrency market. This downturn is part of a broader market sell-off that began last week. The catalyst was a weaker than anticipated July jobs report, which reignited investor fears of a looming recession. Such fears have a profound impact on various markets, including cryptocurrencies. The impact on crypto stocks has been severe. Coinbase and MicroStrategy were among the hardest hit in pre-market trading. Ether, another major cryptocurrency, also saw significant losses, effectively erasing its year-to-date gain. The broader market sell-off has driven these declines, with cryptocurrencies tumbling amid global recession fears. According to Coinmetrics, the price of Bitcoin sank more than 13% on Monday to $50,963.57. At its lowest point, it fell to $49,111.10. This marks a significant drop considering Bitcoin was trading near $70,000 just a week ago. Bitcoin has lost nearly 18% since Saturday. On July 20th, it climbed as high as $69,982. And Tony Trenchev, co-founder of Nexo, commented on the situation, saying, 30% slumps, as scary as they are par for the course during bull markets, and it's encouraging Bitcoin bounce back above $50,000. But make no mistake, we are in a choppy, volatile market environment. The moment to turn bullish will be when Bitcoin retakes its 200-day moving average, which typically tells us if we are in a bull or bear market, at 61,500. Ether's losses were even steeper. The crypto asset dropped 17% to $271.21, bringing its 3-day loss to 24% and erasing its 2024 gain. Crypto stocks were among the hardest hit in pre-market trading. Coinbase took a 13% dip, while MicroStrategy slid nearly 17%. Mining stocks suffered double-digit losses as well. The broader market sell-off that began last week was triggered by a weaker than anticipated July jobs report, which renewed investor fears of a recession. The tech-heavy Nasdaq Composite entered a correction. Japan's stock market entered a bear market on Monday after plunging more than 12% overnight, its worst one-day sell-off since 1987.